Hey, everybody, good morning. It is Tuesday, September 17th, and we are waiting for the Fed to make some decisions tomorrow and then tell us what they're going to do. And then I'm waiting for that employment data on Thursday. I think that's going to be the big report that is going to cause stocks to go up and down. But today, we'll see where trading goes. I am joined by a stock trader by the name of Prad. Prad, you want to do a quick intro?
Yeah, thanks for having me, Victor. My name is Trader Prad. That's what I go by on all social medias. I've been day trading at a prop firm about for 4 years now. Have been decently profitable and looking to always get better at it. At the same time, I'm looking to become an investor also, like Victor himself. So looking to scratch his brain, learn a lot more about investing than I already know, and become one step closer to financial freedom, like everyone always dreams about.
I hear you. I hear you. That's what we're trying to do, and most definitely. And stocks are a place where you can make money, and money is always fun to make. Building a net worth, that's been a mission of mine. I would say since I started working what we call swap meets on the west coast of the United States, flea markets, when I was a youngster. And ever since then, I'm like, I want to work and accumulate some wealth. And it's been a lifelong mission through real estate, stocks, professional life. And I think it's a lot of fun. I've really grown to have a passion and really enjoy investing. I played sports growing up. I played baseball, played football, and really enjoyed that. I really enjoyed the camaraderie. I enjoyed the investing time, energy, putting, your sweat into getting better at a sport and doing so. And I was a big sports fan. I'm still am, but I would say that I replaced most of that passion for sports with stock investing because it's really fun when you nail something. You make 25 grand, 50 grand, when you really double an investment and you see your work, which is more intellectual now versus trying to move a football down the field. The intellectual side of life becomes more a bigger topic as you get older and physically less capable of playing football. So it's great to have you, Prad. So just a quick background. You tell us a little bit about yourself and how long you've done it, and then what I guess your game plan to making money is all about.
Yeah, so I've been day trading mostly for the last 4 years. That's how I got into the market. I was previously introduced to the stock market way back in the day. My grandpa, I have memories of me and my grandpa going I come from India, for those of you wondering, but currently live in Canada. So me and my grandpa back in India, I remember having to walk all the way to the brokers to even have a single trade put in. Maybe it's a day trade, maybe it's a swing trade, and then we didn't have computers back then, so we would come home. My grandpa would pull out the newspaper. He would have me literally map out the closing prices from the newspaper, and he would draw out the graph himself. So that was the main introduction to stock market when I was younger. But then much later down the road now, at around 26 years old or so, I found I wanted to be involved in the stock market again. I found a prop firm in Toronto, Ontario. That prop firm was lucky enough to say yes to my application. So once they said yes to my application, I went in there, put my head down, just absorbed everything that all the better traders who were already there, some of the traders who were, as we call it, graduates, because you have to make X amount of money. How evaluation systems kind of work at prop firms, but this is a legitimate prop firm. You go into an office, like even right now. I go into an office, I have to use their computers, I have to use their software. I'm using basically their money, and I get to keep a percentage of the profits. If I don't make any profits, I don't get a paycheck at the end of the month. So it's kind of like a almost like a legitimate trade floor where you get to work with amazing traders and you get to learn from them. So got to absorb a lot from these last 4 years. Very fortunate that I get to risk other people's money and not mine, which opens up a lot of room, like I said earlier, for my own income to be invested. And I'm looking to put that to work. But as to how I currently make income, it is following a lot of the ways of SMB Capital when it comes to stock trading. For example, today we have some stocks in play, meaning they are doing a little bit more volume than the other stocks. For example, Apple was a stock that was in play yesterday because it got sold off to the downside, was down 3% yesterday off the around close. I think you can see right here 2.78%. So I find stocks that are doing volume in pre-market. I'll do some scans over it. I will even make a watch list every night, at which point I'll have some stocks and their levels to keep an eye on. And then around those levels, I'll have alerts. And when the alerts start going off, I'll look at the time of sales, look to see how the time of sales reacts for this position. For example, here's Moderna. I'm sure a lot of people have been watching Moderna recently kind of give back its gains, move back to the downside, move into almost 52-week year low. I basically just wait around the edges to read the tape, see how the imbalance between the buyer and seller comes into play for me to make a trade off of.
Yeah. So let me ask. So how do you intend on making money? Let's follow Apple, because I think that was pretty good news yesterday, where the stock did go down 3%. And how would you make money in the pre-market? A stock is selling off. How do you intend on making money?
Right. So pre-market, I try not to really touch the pre-market too much. It's not a lot of liquidity there. You could get short if you're looking for on the news that came out. The news being, this is not today's pre-market. That's today's pre-market. Wow, we sold off quite a bit over there. But I think this was the news over here. Is this Friday? Wait, this is Monday. So this is today's pre-market. I got confused. Okay, this is yesterday's pre-market. We got the catalyst that iPhone 16 sales are not doing so hot. I mean, they can only make the same product so many times and people will keep buying it. Eventually, you'll see people getting bored of it, right? You're getting companies announcing tri-folds, two-folds, bifolds phone, and Apple is just giving you the same phone every single year, again and again and again. People getting tired of it. Apple starts selling off to the downside. After the sell-off comes off of the open, here's the move that I'm really analyzing. Where did the stock open? You can see how I have a bunch of indicators already plotted out. So where did the stock open and how active are we around that area? Every time we push around the opening price, which is also right around last week's low, which is basically Friday's low, all of last week's low. So last week's low is from Tuesday. So we open around Tuesday's low, and then we are simply not able to stay above Tuesday's low / today's open for longer than 5 minutes. This is a 5-minute chart. So that's where I start looking for a short. And on any pops, I start looking for a short and I start looking for scalps. Ideally, if I'm short around this area, I want to see this 215 breaking. If 215 doesn't break, that means there's the room to the downside for the intraday is being sealed off, and I'm no longer looking to get big time short on Apple, most likely covering my position around here as I scalp it on the way down. So the strategies like that, looking at technical levels, looking at anchored VWAPs from earnings reports, for example, Oracle, looking at
hold on.
Yeah, sure.
Please go back. Sorry.
Yeah.
This is great stuff. Just great stuff. But I have questions. I didn't want to interrupt you. So okay. So you're in Apple and you're seeing that, hey, in the daily, when you look at the day and you see that it's trading at a higher price and you expect it to come down, what kind of trade are you executing to make money?
On the daily, you see it at a higher price and you're expecting it to go down. I'm guessing that's like, are you talking in the day trade frame or like in the longer term frame?
Well, I'm just asking you. So how would you make money on Apple's action yesterday? Did you buy and then sell in the same day? Did you buy
Short and then
calls?
buy back.
So you
So
sold
it's just
short
shares
and then you
only.
bought
Yeah,
back?
exactly. Shares
Oh,
only. I deal with equities directly. I don't do options at all. So I just go short directly, and then I buy the shares back on the dips.
okay. Very good. So you sold short at a peak and then let's say it dropped 2%, you buy back the shares, you just made 2% in let's say 2 hours, something like
Yeah,
that.
something
Okay.
like that.
Very good.
Usually, I want to see a bigger move than 215 holding, but 215 held pretty well yesterday. So at that point, you just say I'm over with this trade, and I walk away with it.
So let me share with you what I'm doing with Apple, which
Yeah,
um, FYI, we're gonna match each other on a few concepts. So I'm shorting Apple. I started shorting Apple, call it a couple weeks ago. I've made a video on my channel giving you viewers the reasons for it. You cited some of them, which is, hey, I get the iPhone was great 15 years ago. It was freaking, it made your head explode 15
yeah,
years ago, 15 years ago, 15 years ago. And today, their competition's really making it happen. The foldables look great. My next phone is going to be a foldable. So I started shorting Apple. My entry and exit is going to be more long term. I expect so my short positions, and this is my recipe. It's like not out of a book or anything.
for sure.
Is I track stocks. I analyze stocks based on the desirability of the company, which is kind of a more qualitative assessment of a company. Are they competitive? Are their products competitive? Are they growing? And Apple's not growing. That's the biggest alarm that people should be hearing is it's a $3.2 trillion valuation company. It's the most valuable company on the exchange.
That's
They're
right.
not growing. How is it possible for the most expensive stock on the stock market not to be growing their revenues? So that's like part of my qualitative assessment of a company. Then I go into quantitative, which is, all right, what are their cash flows? If I did a net present value calculation of their cash flows, what does it calculate to be? And based on that analysis, I'm like, it's overpriced. So my intent is to dollar cost average into a short position of Apple, maybe put $10,000 to $20,000 at risk. And my exit, really, the guardrails are 30%. If I'm wrong and Apple cures cancer and does all these amazing things and it goes up, I get out when I lose 30% and I get out when I make 30%. Okay. My recent successes short selling CrowdStrike. The universe helped me out and caused the
Yeah,
biggest PC outage in the history of mankind. Thank you, 42% return in 10 days. And then super microcomputer, I saw that coming from a pretty good distance. Tech companies, hardware companies do not get valued where it was. And that one was a 52% return in 2 months. So Apple, I think it's going to be slower than those two. But I agree with your observation of Apple. I think the difference being is the things I like about your approach is you realize gains quicker than I do.
yeah. I mean, the idea of the prop firm is a day trade only, so we are not allowed to hold positions overnight. If we do hold positions overnight, uh, we kind of get dinged quite a bit on it. So we don't have even the opportunity to hold shares overnight, and that's my main account. So I trade for a company, and then I get to keep a percentage up there of the profits that I bring in. So because of
Awesome.
that, I have to trade intraday moves, look for kind of intraday swing patterns to trade off.
Okay. So very interesting conversation. And let's carry on. I think you wanted to look at a different stock. Go for it.
No, I was just giving you an example of how I look for play in day. I basically look for earnings anchored VWAPs also, which is, for example, Oracle recently reported earnings. You can see how this purple VWAP is currently coming in around $159 on the daily chart here. So it's still on a steep incline. This incline, I'm expecting it to continue a little bit longer and keep getting pulled up. Anyways, that's a whole different topic. But the idea is, anchored VWAPs from major points such as earnings or a major swing low also help me make decisions off my day trading opportunities over here. For example, here is the earnings anchored VWAP currently coming right around the Friday's low on Oracle. So if the stock, if anyone's looking short Oracle at the moment because of how big of an explosive move it just had to the north side off its earnings, I would suggest them to be careful with their expectations, maybe not be expecting more than 160 to the downside. Once Oracle actually starts getting below 160, which is where this earnings anchored VWAP is, for anyone who understands VWAP, you can understand how that indicator works. Basically shows you the best price or the average price of the buyer or the seller, whoever you're tracking, from that anchored point. So I'm anchoring it to the earnings day. I'm actually anchoring it to the very minute of the earnings report. You can see that right here. I'm anchoring it to the very minute of the earnings report in the after hour or the pre-market usually. And that gives me a very good gauge of how the buyers or the sellers are behaving anytime we pulls into the average price of the person who initiated, of the hedge fund who initiated, of the bank who initiated the main move behind the stock. So things like anchored VWAPs, previous days highs, previous days lows, last week's high, last week's low. And then obviously reading the tapes, such as the time of sales, looking at the imbalance between the buyers and sellers around these key points. Reading the time of sales all day is exhausting, right? So wait for these prices to come into play around the edges, and then read the time of sales around the edges, and then you get to make a quick bet on that position by not risking too much. Hopefully, that way your risk and reward are expansive.
Okay, so let me ask a couple questions here, which is, so you see a stock really move up quickly, and I guess what are the types of trades that you're executing in that day to try to make money? Are you still looking to short sell and then buy the shares back in the same day, or are you looking at a different type of trade?
Yeah, depends how you say going up way too much too quickly. I guess that part is a little discretionary, honestly. And I do take a look at that. For example, like small cap names, we have this stock over here, Children's Place, footwear retailer, 12 million flow. I think 12 to 13 million flow, 55% short flow, could be higher now. Volume has been going a little crazy. The stock has been going a little crazy, but I'm not going to try and look to short the stock every single day, as it's absolutely rolling over shorts and squeezing them. But this is what I would call parabolic. The stock has gone too far up too quick in way too little of a time. The stock's ATR was only about $1 or so. Now we can clearly understand by looking at the bigger picture that the stock is having a short squeeze. So how does the short squeeze come into play for me? I think obviously it has come into play a little bit, but as long as the stock stays above 1150 for another 4 more days, maybe even another week, anyone who's building short in this area most likely has their stops above 1543. Trap some shorts, build some shorts in this area, keep them above 1150. Even worse, maybe trap them by getting under 1150 and then getting back above, such as one of these names, ASTS. We got a big expansion from May 24th from $2 to August 24th to $36. So big expansion. We break down, we trap the shorts, and then we pull them right back, and then the stops start getting busted out. So trap them on this area, stops burst out. At this point, I'm looking for a long through here. But if we start getting below, if we start getting actually below 1150 and stay below 1150 on any pullback, this is what they call failure to follow through. At this point, the shorts are in power, and they have the buyers, the people who have been trapping the stock, they are no longer in power. They are actually I guess they're the one in power because they trapped the shorts and then they started rug pulling people. So now that the stock is under 1150 and can't get back above 1150, I'm looking to get short on the pops. I'm looking to take the short on the breakdown. So it depends on what really happens in this area and this area. Anything in this area is noise for me. I don't care about it.
Amazing. Cool. That's really interesting. And I guess when there's a short squeeze going on, it's pretty exciting. It's interesting how you play it. I would get a bucket of popcorn and probably watch you trade. Next time there's a good short, please send me a message. I'd love to.
For sure.
Love to watch what you're watching.
This one could open up the gates to the downside today, the floodgates. No volume at all in the after hours. That's so sad. No volume today. So maybe the floodgates are not going to open up on this one yet. We do have another one to keep an eye on. SMMT. This stock has been going crazy along with a bunch of other stocks. So from $2.93 to $32.
Wow.
This one's not a small cap, though. I mean, it has a 703 million, I guess, decent float. And the short float's also not that large. So some complete different game going on. End of the day, same idea. We got a double top into Friday's high on Monday. Today, we're trying to take out Monday's low already in the pre-market. If we take out Friday's low over here, right off the open, which is around $27.50, and stay under $27.50 for the rest of the day, I think you'll see a lot of shorts getting built into these pops. And then on every breakdown, you're going to see shorts building into the move. I think they call it pyramiding. You're going to see shorts pyramiding for a move at least back into $13, $14 over the span of the next few weeks. So this is a highly watched name over this week for sure.
Cool, man. That's super interesting. Let me see if we've got some comments. Let me see if we can respond. And everybody that's tuning into my channel, as I normally go over the markets and go over more long-term investing, but today I'm joined by Trader Prad, and he is more of a day trader, and he's really showing how he goes about making money, which is awesome. So I don't know if you could reveal it, but Sebastian wanted to know what's the name of the software you're using.
The software the company that I work for, it's called Real Trading Prop. I think you can Google that. They used to be called Day Trade the World, but they recently changed their name to Real Trading Prop. But the software is called P-Pro 8. You'll not be able to access it. It's a proprietary software. Most which is proprietary trading companies have their own software, in-house created software, and they don't like to share those softwares with anybody. But I think if you're interested in what it looks like, you can just Google P-Pro 8, and then you'll see a bunch of pictures about it.
Cool. And then Shadow Guy, good morning. Curious if you can use leverage ETFs in your trading strategy, like TQQQ and UGT.
I do trade TQs and SQs instead of trading the QQQ directly, just because of the better liquidity options, the amount of size I could take in SQs and TQs compared to QQs. And at the end of the day, it still works out the same way if you're doing the ratio and the math directly, so it doesn't really matter. I just feel like I can control my risk much easier on the leverage ETFs. But when it comes to trading the ETFs, the way that I trade stocks, for example, not as much. For the leverage ETFs, for example, not leverage, but for the overall ETFs, I kind of have to change my mentality a little bit and look at the big picture more when I'm looking to make a trade on the S&P 500, when I'm looking to make a trade on the QQQ. I have to look at the bigger picture more. For example, we have FOMC tomorrow. Do I really expect the market to take out the all-time high, which we're at right now in the pre-market? This orange line is the pre-market line where the stock is currently trading at, and we're exactly into all-time high. Do I really expect the market to take out all-time high and rally much more than that when the largest company, the largest publicly traded company in the world is not doing so good? They're not doing so hot as Victor mentioned. So that's going to bring some, that's going to bear some weight on S&P 500. It's the number one stock in the SPY. It's the number one stock in the QQQ. And also we have FOMC tomorrow. What big buyer is actually going to go out there, buy the S&P 500 right before FOMC announces how much of an interest rate cut they're going to have? And right before the S&P 500 rebalances, which is actually at the end of the week. So I don't see a big buyer coming in and propping up this market much higher than where we are at the moment until that 25 beeps or 50 beeps rate cut. So once I look at this bigger picture, I'm looking for two variables. Either we stay long higher, stay long and strong above 565, or we have a fail breakout of this 565 off the open. For example, we go to 566 and then we pull right back below and we're not able to show buyers above 565, at which point I'm most likely looking for a short, but expecting the market to go much below yesterday's high or Friday's high is also crazy. So I'm not expecting much volatility. I'm not expecting a lot of fun. You're also looking at other instruments such as VIX to include in this bigger picture. So when I'm trading ETFs, I'm not really imploring what I do with day trading. I have to look at a way bigger zoomed out scope.
Good stuff. So let me comment on some of what you shared. So tomorrow we do have, the Federal Reserve talking, and I shared this yesterday. I don't expect a big move in the market. And I agree with you that are we going to test all-time highs? No. I don't see if they go 25 basis points, that's going to be probably perceived as a slight negative, like, oh, we were hoping on 50. And then if you have a 50-point move, and then in the speech phase of their announcement, they're talking about the economy and how they're seeing an economy begin to weaken, then the market's going to sell off. So I think both scenarios, I agree with you that we're not going to test all-time highs. Now, I happen to think that the employment data, the unemployment data coming out on Thursday before the market opens, if that report comes in bad, combined with some reports that have been coming out that the consumer is beginning to default on a lot of credit card debt and default on auto loans, if we come in with, hey, there's higher unemployment, people are losing their jobs, then we're going to have a pretty good sell-off on Thursday and probably continuing into Friday. If the unemployment comes in as, favorably or as expected, we're not going to have a big move, but I don't think we're going to test the highs. I think there's just too much fear right now. You got this massive election. You have an expensive market, in my opinion, based on both qualitative and quantitative figures. So that's my feeling on it. Back to you.
No, I almost forgot about the election because I'm Canadian. I forgot that the election coming up in November. We got DJT, the stock to care about. We got the overall market to care about. Yeah, that's a great point over there. I just wanted to show the chat this tool for those of you who don't know. There's this awesome tool that shows you the target rate probabilities for the next FOMC meeting, and actually you can click on all the dates over here and it'll show you the probabilities of the rate cuts and so on. It's on cmegroup.com, and currently for tomorrow, Victor, we're expecting a 67% probability of a 50 beeps rate cut.
Okay.
Let's see if that happens. But I agree with you. The market has been getting bought up into, usually they call it what? Buy the rumors, sell the news, right? So usually we get a buy the rumor event. The rumor has been we're getting a rate cut. We've been buying it up so far. So does tomorrow at 2:00 actually end up being a sell the news event? And ding, 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 ding. By the way, ladies and gentlemen, for my day traders over there, the market is now open. And looks like we're immediately ticking down on the S&P 500. And there you go, reject off of the S&P 500 from the all-time high, as Victor and I just mentioned, most likely happening.
So let me ask a kind of, this is going to be more of a high-level question. So the month of really the last 2 months, we've seen drastic volatility September being a perfect example. The first week we were down more than 5% on the NASDAQ. The second week we were up about 5% on the NASDAQ. It's like, holy smokes, man. On average, we're close to even, but boy, it was not. It was like a couple of storms rolled in, and now it's peaceful. So for me, I like volatility. I like stocks that are moving because it gives an opportunity to see a company that I believe in potentially. And I'm like, hey, this company's misunderstood. Yeah, sell it off. Sell it off. I'll dollar cost average into a position. And then when the market realizes, hey, XYZ company is worth a lot more and it starts to really move up, that's when I make money. But tell me about what conditions do you think, oh man, I love conditions that look like this?
Volatility obviously is a day trader's best friend. So anytime volatility goes up, your eyes just kind of widen up because you know that there's opportunity going to be in the market. Uh, what was the other part of the question besides volatility? You said?
Well, just the conditions, like you want volatility. Do you want testing all-time highs, all-time lows? Do you want
In terms of like the market or a specific stock that I'm trading on
market
that day?
market conditions?
Market conditions, yeah.
Yeah.
So in terms of market conditions for the bigger picture, yeah, I don't want it to be stuck in previous days candles. Inside candles, as we call them, are very boring. Not a lot of opportunity in them. But there are times where the market needs to compress and you recognize those ranges and you just wait on the ranges and not try to get chopped up in the middle. Ideally, anytime the market is making a higher high and a higher lows on the daily chart, or even lower lows and lower highs on the daily chart, putting itself in a beautiful trend, or gapping up and then looking to fade the gap, or gapping up and looking to actually keep on going. So anytime the market's actually moving is fun because we get to make some money, some opportunities over there. But being stuck in ranges is a little boring for me. I get easily turned off in markets like that we just had a little bit in the end of August after that big, as I call it, the Great August Depression that we had from the scare of Japan carryover trade. And then we just consolidated into these all-time highs. Compression ranges are fine, right? Nothing wrong with it. Yes, I do get bored of it, but the advantage of compression ranges is that they give you beautiful breakout opportunities every single time. The idea is there's a buyer fighting, there's a seller fighting. Eventually, one of the side loses, and when the side loses, the stock moves easily to the next level. And that's the beauty about S&P 500 and QQQ. They move very level to level. I usually use the futures, the SPY futures and the NASDAQ futures to chart the S&P 500 and the QQQ. That's why I don't have a lot of lines on these ETFs for myself.
Awesome. All right, cool. This is really interesting. Can we let's look at a couple of stocks. I think I wanted to look at SPOT, if we could try this exercise. You kind of give SPOT kind of a review, and then I'll take it on and kind of go like investor perspective. But take a look at SPOT and tell me what you're seeing and how you would potentially trade on this stock.
So right off the bat, what I see is I don't see a lot of volume coming in as a day trade perspective. And for that, I just quickly go in and take a look at actually, yeah, see if you put your line, if you just draw a line where the stock's highest volume node was for the last 5 days and compare it to today's opening volume print, not really an in-play name. So this is kind of a wishy-washy way to do it. The real way to do it, obviously, is to use the relative volume on a stock, for which I use Trade Ideas. For anyone interested. So Spotify, not really something that I would keep an eye on as a trade, but as you can see right here, multiple day low into $337.13. If you even zoom out on the daily chart, you can see how that level right there, we got the Friday low, we got the Thursday low, and we also got the Monday low. So it looks like a buyer is currently propping up the stock above 337, and we also have a seller just above 344, 346 who is stuffing the stock down. So if I'm looking to make a day trade, I don't have to make a day trade on the stock at all. But if I am looking to make a day trade, I'm waiting to see how the stock behaves at 337 or on the higher pops over here. Sadly, the pops are a little bit not as clean as the bottom that we just have. The most recent bottom is a lot cleaner than the pops over here. There, the highs are back and forth. And at the same time, we also have a couple levels to the downside where the stock could easily flush down into. That gives you almost one ATR move, and then a second leg for a second ATR move if it actually gives you in the rest of the week and so on. So I'm only looking to make a trade if the stock can break below 337 and show me weakness under 337, maybe at 336.50. If it's showing me that it's staying under 337 on any pops, I'm looking to get short for a mean reversion move back into this, what seems to be double bottom, eventually maybe becomes a triple bottom. But if we continue to hold 337, maybe a fail breakout at 336, the stock just peaks under 337, touches 336.50, and then rips back up to the north side. Here's the entry point for me. This is a concept from Lance B. I think most of you guys know who Lance B is. That point right there is where I'm trying to enter, not over here, because when you're trying to enter on the left side of the V, you're just predicting, you're guessing. But when you get it on the right side of the V, now you have a clear bottom defined for you. You have buyers showing you in your favor.
So let me try to summarize what I think I just heard and just confirm that I understood it and I'm learning correctly.
Yeah.
Spotify is not overly volatile, and it's not a great stock to trade because it's just not moving enough for it to be an opportunity like other stocks. Again, you have thousands of stocks to pick from. So why pick one that's really difficult? Pick one that's easier. Is that am I understanding it correctly?
Yeah, as a day trader, you have to be very, I mean, how many stocks can people really trade? Maybe 3 at the best of their ability before they get diverted. 3 at the same time, I mean, right?
Correct.
And before your attention gets diverted. So
and that's three out of a choice of thousands. So
exactly.
you got plenty to pick from. Might as well pick 3 that you feel like, I know these stocks. I kind of know what the CEO had for breakfast and what he's going to have for dinner kind of knowledge.
Yeah.
So, all right, good. Let me share my screen and let me go through a thought pattern on spot and see what I am seeing in the stock. So I'm going to go from a perspective of investors. So first, Spotify, the business.
Victor, could you remove the comment because I think it's blocking the screen a little bit?
Yeah, thanks for suggesting that. So first is the business. Is it a desirable business to me? I've been a Spotify customer for a while. I don't know how long, and I love the service. I mean, I just donated CDs. Okay. I was cleaning out like a closet and I ran into CDs, right? I don't want CDs anymore. I have Spotify, the biggest library of music that I can possibly have. I listen to books on it. I'm just big on this, the service. And I believe, because I used to use Pandora and I've tried Apple Music, and other rivals are trying to kind of say, hey, well, we can do it too, but it's not Spotify. So it's the best experience. So I like that. Hey, you know what? They have a spot. They pardon the pun. They have a position in the marketplace where, like, hey, we do music and we'll give you the best experience to listen to music, as well as we're expanding into books and other podcasts and so forth. All right. So they're the leader in their, little industry. Okay, good. Good profit margins. Good. Let's look at their other fundamentals. So it's a pretty good value company, right? The valuation's pretty high, $68 billion for what I consider is a one product like company. They're always going to be limited to just being in that particular category. And their PE is very high. Forward PE is a little lower. Analysts love the stock, but it's fairly priced. I mean, a 2% discount's nothing. Now, I really focus in on revenue growth. is revenue growth tells me the health of the company, and they are very healthy. Growing at 16% on a very large number. This is euros, which is close to dollars. So I'm not going to fuss with the conversion because it's close to 1-to-1. So that's a very big number just to be doing music and being able to grow at 16%, I think is quite impressive. All right. So they make money. They're growing their revenue. And how much cash do they produce? They produce $1.3 billion of cash. And I like using cash flow. That's what most investors, Warren Buffett, Charlie Munger, the legends, 100 years ago, they used free cash flows. Today, they use free cash flows because it's the cleanest way of valuing a company. And it somewhat resembles the bond market, if you know bonds. So 1.3 billion, it's a growth company. I would value this company. I would multiply that number times, let's say 30, because this is an impressive company. And that might be a little rich, but if I multiplied it times 30, I'd get to about 39 billion in value. And this company is valued much higher at 68. I've never been able to buy into Spot, even though I love the company, because their fundamentals just don't support the valuation. It's overpriced. Now, the other opportunity that exists is a big player can acquire Spot because they're so freaking awesome. Like Alphabet, Google might acquire them, or Meta might acquire them. Somebody big might acquire them, and that may happen. But I can never invest with acquisition being the thesis. So in general, I'm looking at the company. I love the company, but I don't like the stock price. The two things are very separate. The stock price is not the company, and the company is not the stock price. This is a great company. Awesome. I love their experience, but I just don't want to own their stock price. Their stock price is too high. If there comes a day when, let's just imagine Meta came out with their Meta AI, and Meta AI provides a music service that's phenomenal. And Meta's like, you know what? We have so much cash. We have so many resources. We are going to pay all the artists what they need to get paid, but we're going to offer free music on Meta AI. Well, that would probably attract a few customers because they're like, oh, I could cut my bill to Spotify and go to Meta Music. Yeah. And Meta's like sitting there going, oh, I can acquire customers to my AI platform. And my valuation goes from wherever it's at, 1 point something trillion to 5 trillion, because now I'm showing that not only do I have 4 billion active users of my platforms, I now have 1 billion users of my AI platform. And now my valuation is 5 billion. And who cares if I'm spending $500 million a year paying artists to use their music to provide it for free on my platform? If something like that happened, Spotify is going to get hurt.
Yeah.
Well, and their revenue will stop growing. Once you stop growing, you go from a $68 billion valuation to 20 very fast.
Yeah.
So that's how I look at a stock. You look at a stock from what I appreciate from your process and plan is you realize gains quickly.
Yeah.
My process is long-term, a little more theoretical. And I would say that the things I like about it is I could compound a gain, right? I can see a company just continue to go up in value over years. The thing that I dislike about it is sometimes I make a very good investment that turns bad. Like Chevron is an example. I've been in Chevron for decades. At one time, I've been up 150%. And right now, I'm down 3%.
That's not bad.
And it's the same stock. It's the same shares I bought a long time ago. And because the stock goes up, it goes down. I dollar cost average additional investing in it. So do I like Chevron? Absolutely. Do I want to hold it? Absolutely. So that's a good stock, but it does leave one thinking, well, the traders kind of have it right, because if they strike gold, they harvest the gold and they sell it, and they move on to the next vein of value, harvest more gold, sell it. And where investors over time, I make money. I make money every year. That's another desirable of investing is you're kind of planting a garden of investments. And as long as 7 to 8 of my investments are doing good in a year, I'm having a great year.
Right.
I could have a couple sick puppies and they'll probably come back to health next year or maybe the year after. But if 7 out of 8 puppies are thriving, I'm making a lot of money. Wonderful. So that's my approach. So we looked at Spot. You want to look at Meta next, and maybe I can start and then you can follow.
Sounds good.
All right. So Meta is my biggest holding. I've been holding Meta for quite a while. I've got the value of my shares are I own $232,000 of Meta, and I went through the whole dip of 2022, bought shares at that time, but I've averaged in my investment. I'm sitting on 100 and some odd % gain on that stock. When I look at Meta, I'm looking at a company that has about 4 billion people that are an account holder to a Meta platform.
Oh yeah.
WhatsApp is incredibly popular, especially in Latin America and other parts of the world. I communicate to people in India on WhatsApp, in Latin America through WhatsApp. It's pretty incredible. And of course, Facebook and Threads and Instagram, just a great company. And their AI business is being somewhat provided for free because the valuation that I look at is pretty much not including potential AI business. And I'm going to jump right into my valuation. When I look at companies, I try to determine what are the cash flows the company is going to deliver, because at the end of the day, we invest in an organization that's going to deliver cash back to the customer, back to the investor. Investors think of a business. Let's say you buy a pizza shop and you're like, the reason a lot of people think pizza, selling pizzas and all that isn't all that cool, but that pizza shop delivers $10,000 of profits every month, $120,000 of profits every year. And it's pretty consistent and it's growing at 5%. That's a really good investment. I don't care if you're selling pizzas, but that's a really good investment. And you can do it net present value of those cash flows. That's a financial calculation. And you could say the net present value of that pizza shop is this because you're giving me cash flows of $10,000 a month, $120,000 a year, and they're growing at 5%. So I try to get the information out of financials for a company like Meta, and I put those cash flows into a cash flow forecast. The forecast for the current period is going to be $47.3 billion is the starting point of cash flow. And I'm going to grow those cash flows by 8% for Meta, which is a realistic growth rate. So Meta is going to deliver $47 billion of cash in the current period. I think that's within the zone of accuracy. And then 8% growth is very realistic. And then all the cash flows beyond year 4 that Meta is going to produce, I'm going to grow those at 5%. Their AI business is in there. It's very good. Now, what am I going to discount those cash flows by? Again, following principles of finance, the discount rate I'm going to use on Meta, which has a very good balance sheet, very strong business, is 8%. It could be higher for a higher risk company. It can't be much lower for a stock because stocks could get themselves in trouble and be riskier. And when I discount all these cash flows, I get about $1.6 trillion of value from those cash flows. I had cash on the balance sheet and take away debt to get to 1.6 trillion of value. Now, this market cap is not accurate. I have to update it, but it's roughly 1.3 trillion. But the stock price is accurate. It updates automatically. So I'm looking at a discount of Meta on the stock price based on their free cash flows of 19%. Now, I continue right now. I'm not buying any more Meta shares. I'm waiting for the election to get done, and then we'll see what I'm going to do with my Meta shares. But it's the biggest holding in my portfolio. I've got a pretty sizable investment. I'm good with Meta, and that's how I approach valuing Meta. When I was valuing it in 2022, when the world thought, at least investors thought, Meta is so terrible. It is so terrible that we are going to discount the shares and just sell them like a garage sale item. And we're going to discount them by 76%. And investors like myself were like, thank you, stock market. You're out of your mind, but I will gladly buy that $100 bill for $20. Can I buy more? Can I buy more $100 bills? Now, it took some internal fortitude and took like, hey, you know, I really believe in Meta to buy shares here. And I did not buy all my shares here. I've been buying shares from back here to here to here, you know, picking spots where I think it's a good buy. So in general, it was a good investment. So that's how I look at a company, and I look at their stock price, make a decision, and then hold it long term. Let me pass it over to you, and you tell us how you look at Meta.
Yeah. So once again, looking at it as a day trader's perspective, not really as an investor. So all I really want to see is price action at levels that the stock has found some resistance previous days or previous days supports on the downside. So we had this level. If you go to the hourly chart, let me zoom into the hourly chart right here into 527, where the stock has kind of been stuffed below. Obviously, the bigger picture is very important. The bigger picture, as Victor mentioned previously, they got sold off because they increased their capital expenditure for Multiverse, which was a failed project till date. It's still a project that I still hold very close to my heart because I'm a gamer. I love my video games, and Multiverse kind of attracts that audience first. So still attracted to that whole project, but that project's capital expenditure going up, taking the stock to the downside, and no real returns from that. So the short over here was awesome. And then eventually they said, okay, you know what? We're dumping that project. We're going to put it on the shelves. And now we're going to start working on AI. And eventually that made the stock go all crazy. And if you actually notice their most recent earnings report right here, they announced capital expenditure going up, but this time compared to previously, the one positive thing that they had is revenue went up along with this. So working on AI actually brought in more revenue, which makes sense, right? They own Facebook, they own Instagram. AI directly taking all of the data in the world out there that they have for free, and they're training better curated ads that people are actually clicking on. Instead of just swiping past them, people are actually clicking on these ads. These AI ads now are so crazy that people are drawn to the ads more than the actual content on the platform. So shout out to Meta on using AI in such a marvelous way. And because of that, Meta was one of the strongest stocks in the Magnificent Seven when the whole market was looking weak. Meta was resilient. Meta was ridiculously strong. So I think when you say you love Meta, I can understand why, because you were probably watching your other Magnificent Seven holdings fluctuate quite a bit, but this bad boy was staying strong, and now you can see on its rally back into its all-time high. I mean, what other Magnificent Seven is really at its all-time high? Not a single one of them, right? Not Apple, not Tesla, not Nvidia. Not Meta's the only one, along with the S&P 500 at its all-time high, and getting ready to really break out of that potentially with FOMC, or maybe find resistance again at that level. So as a day trader's perspective, only thing I care at this point is the fact that the stock got above 527. Damn it, can't speak right now. 527. Getting above that is a very bullish indication, and then getting above it, we were finding buyers into 530. So at this point, I'm only waiting for dip buys, longs over here, or a possible reject short for an intraday scalp short. But even then, I'm not expecting a big move down off that short. So ideally, I want to see the stock kind of creating a little buffer zone in this area, showing me that a little bit of a fight between sellers and buyers, because if that fight shows up, that means whoever is selling in this area has their stop right above this all-time high. And when that all-time high breaks for an intraday long, I'm looking to smash that long and then ride that beautiful train to the upside, to sunset, to glory, to wherever the stock goes to.
Awesome, man. I want to see that episode, Brad. So let me just do a quick time check. It's been an awesome session. I so appreciate you joining me. I would love to do this again. What kind of time do you have? I know you've got stuff to get to, but do you have?
I got more time. I got the time for you today.
Okay.
Yeah.
All right. Want to make sure I was good on that. So
Yeah.
So the thing about stocks is you get to pick your lane, and you pick your general lane. But I would admit that when I do my homework, and I agree, an earlier comment you made, which I can appreciate, is you can only focus on a number of companies and really become an expert. I'm probably guilty of violating that a little too often, but sometimes, like, I found myself investing in a stock, for example, Broadcom. I made money on Broadcom on its way up, sold it. Thank you, stock market. And now I'm shorting the stock. And it's almost like, well, I know the company. I could almost recite their freaking cash flows. I could tell you what the company's worth. And Broadcom was founded less than 10 miles from where I reside. I know their whole story. Okay. I appreciate the company. I have personal friends that work there. Okay. And the stock price is too high. So that's
too high.
Yeah. It's just the stock price is not the company. The company's not the stock price. And if I'm correct, I'll make money. If I'm incorrect, I'll lose money. But I'm using the knowledge of that one company in my favor, whether I'm buying and holding, or I'm saying that's too high. I think I'm going to short it, and I'm going to short it until it hits a 30% gain for myself. Or if it surprises me, goes up, I just paid for a lesson, and I have to figure out what that lesson is. Stock market's going to teach me a lesson, whether it's, hey, don't fight momentum, and you fought momentum on this one. You were wrong. So pay me and I'll pay the market. Your thoughts on how you focus your work to make sure that you stay in a zone of profitability?
So when it comes to investing and day trading, I think there's obviously a little bit of, not a lot of difference over there. You can focus on a lot more than 3 stocks on investing. I believe you do a pretty damn good job at it. You have a portfolio, right? We have portfolio managers managing. When I say, more than 3 stocks, I'm talking about in a day trade right off the open. You can at best manage 2 to 3 stocks, maybe 4 stocks if you're really good at it, and trade them at the best of your ability. If you're watching more than 3-4 stocks off the open, your attention is going to be diverted. You're going to miss a possible tape read in this area on that stock. You're going to miss out a key level inflection read on this level on this stock. So when I'm talking about the 3-4 stock things, I'm mainly talking about, trading it off the open in a day trader's mindset. But it could possibly apply to investors too. I'm not sure, because I haven't really invested that much in my life. But in regards to how do I keep myself focused for my day trade, for looking for out of the pool of 1,000 stocks, how do I find the main few stocks to go to? So I do my homework every single night, where I create a watch list. I actually go live on YouTube, if I can really quickly give myself a shout out over here. I go live every single day, Monday to Thursday at 8 p.m., where I'm basically looking at stocks that moved that day. I review my trades on that day. I look at stocks that are moving on that day, and I also plan for the other movers that could potentially move the next day. Obviously, we can't predict what happens in the pre-market. So for that, I have awesome tools like I call them CNBS because they're usually BSing half the time, but it's CNBC. The CNBC watch list that they send out every single morning on their website. I look at what stocks are moving. What is the catalyst behind it? For example, Solar Edge Technologies (SEDG) was down more than 6% off of a downgrade from Jefferies in the pre-market. Okay, that seems like a pretty substantial move, 6% to the downside. Let's go take a look at the stock, and that looks like, yeah, it went down 6% in pre-market, but it just bounced completely back to the north side. So at that point, are you still looking short? Yeah, it gapped down, but are you still looking short at this moment? It's showing you a little bit of a rejection off of Monday's high, which is good, but this is almost building up for a breakout through Monday's high based on today's action, or it's just going to be sealed off in this range. At that point, I don't care about this trade anymore. So either I'm looking for a long in this area or a short in this area if we're stuck in a range, or if it sets up for a bull flag breakout, which is a chart pattern, technical chart pattern. If it sets up for a bull flag breakout past a Monday's high, then that could open up at least a little bit of a scalp long for me into $23.50, into $24, where I'm not risking too much. I'm maybe risking 50 cents to 30 cents on that trade, and I'm looking for a $1.30 move at the very least to the upside on stocks like that. So I'm focusing on stocks that are in play. For example, Intel moving away from its foundry business, jumped yesterday, I think, to a pretty decent price. Today up around 7% in the pre-market. I already know right off the top of my head, because I was looking at Intel all this week, Intel 22 is a level. So you can see right there, I already have a line into $22. And yeah, Intel gapped up, but is it finding buyers above 22? And the answer is no. So what am I looking to do? I'm looking to short this stock on a failed breakout above a very key level. Yes, it gapped up 6%, 7% off of that catalyst, off of that news. It went up actually in the after hours, but it did not sustain buying above this area, above the 22 area for me. So not able to hold above 22. I go short right here. I'm risking very tight, maybe 20 cents, maybe 10 cents, and I'm already $1 in the money as the stock is now pushing into Monday's high and finding a little bit of buying above Monday's high. Easy short, risk to reward, 10 cents of risk for $1 reward. That's 10R right there. So boom, easy money. I'm looking for opportunities like this where I risk 1 unit of risk. And I want to make at least 2 units of reward at the very least, because at that point, I'm allowed to lose more trades. My win rate's never really above 50%. It's around 50 to 53%, honestly, my win rate. But my risk to reward ratios is where I get paid off of. And the way you can really aim for those risk to reward ratios is by being patient around the key levels, not trading in the middle, because your risk to reward ratios and the probability of the trade winning is just a coin flip at that point. But when you make the read at the right level, and the levels obviously come from technical reads on the daily chart, how important is that 22 level, right? The stock has just completely been under 22 ever since its most recent earnings report. If it can get above 22 and stay above 22, then I think we got to move into this triple bottom over here of 24.50. If we can get above 24.50 and stay above 24.50, then we got a little bit of a move into these previous anchored VWAPs and into the previous support area of $30. So these are the technical reads that I'm waiting to make around these key areas. In between prices, I don't care. So now that the stock has already played below 22 for the short side, if I didn't play short off of 22, I'm waiting either for 22 to get tested again, or I'm waiting for 21 to get tested. I'm staying away until then.
Great stuff, man. Yeah, my view on Intel is this is one of the stocks that surprised me big time. I thought, how can it get any worse? And it did. It got a lot worse like a month or two ago. And the piece that is going to take a long time to repair for Intel with shareholders is their last earnings report was so bad.
Yeah.
It was so bad that they needed to pre-guide. That's just professionalism. That's like, so the company management needs to be in partnership with the stockholders.
Yeah.
Stockholders are the owners.
They need to work for them.
The management team is running the company. There should be a partnership.
Mm-hmm.
And when the management team completely surprises the owners, it kind of really upset me. I'm like, guys, I can't trust you anymore. I don't know what the heck's going to happen with Intel next. So I waited a little bit and then sold all my shares, just thinking, I don't know what's going to happen to Intel. For all you know, it goes up 100%, it goes up 200%. It's just really hard to like believe them after that. It's like, guys, you need to pre-guide on such a horrible earnings. You need to tell us, because you knew that a month in advance. If you didn't know that a month in advance, I'm even more skeptical of you're running the show correctly. The accountants knew, hey, our earnings are going to be super bad, and the revenue's bad, everything's bad. So you needed to pre-guide that. They didn't. So I sold out of Intel. Again, part of my investing long-term is qualitative. Like, do I believe in the business and so forth? There's a lot of aspects to Intel that I believe in, which is, I think they're in the right industry, which is semiconductor. They're dominant.
80% of the world runs on Intel chips, right?
And PC sales are beginning to go up. I'm also an Hewlett Packard, Q customer or owner, and that's been doing really well. So and I'm seeing the data on PC sales through that investment and say, well, that's going to mean more revenue for Intel. But be that as it may, if I look at Intel, I would be guessing as to where the value is going to go. One distinction I wanted to point out there between stock trader and stock investor is it seems to me that a trader has to real time be involved with a position. Yeah. If you short sold, let's say whomever, Intel at 10 a.m. Eastern on a trading day, and you short sold, I don't know what quantities you're dealing with, but I'll just use quantities that would matter to me. I short sold $20,000 of that stock. You're watching it. You're watching it real time.
Oh, yeah.
So you're very plugged into that position for the day, and then you're trying to get out of it, or you're getting out of it, hopefully with a good profit. An investor is like, I believe, let me put out a stock that I'm buying into. So I believe in Amazon. Okay. I've made money on Amazon over the years. I think it's a phenomenal business. It provided a really nice opportunity to buy. The universe thought, for some reason, the universe not too long ago said, yeah, Amazon's not that cool.
Well, that's because Bezos has a wall of selling into $200, and that's why we could not get above 200. Bezos, right into that peak that you highlighted, Bezos has a sell order between 200 to 201, and he is propping the stock down and keeping it stuffed at the moment. So I'm waiting for it to go back into that 200 to see if that sell program's still there, so I can take advantage of it again. And if that sell program's not there, we're going to have such an explosive breakout above that all-time high that I'm going to get so excited to take that breakout also. So this 200 price is exciting.
The last 30 seconds of this stream is probably the best 30 seconds of knowledge or awareness that I've been delivered in the last week. Thank you. I didn't think of it that way. That's why two very different perspectives always reveal something interesting. I did not know that, sir. I'm locking that in.
Yeah.
And I'm going to watch that. Where I was going was I wanted to show a stock that I believe in, and I'm buying into Amazon, and I don't have to watch it all day. I'm buying into it, and I can tell you my shares that I bought here are in the green, doing great. I've sold puts on Amazon. So if it drops, give me your shares. Glad to buy them. Thank you. You got any more to sell? It's kind of going up. So my whole observation that, hey, this thing came down and I'm going to take advantage of it is kind of playing out. I still buy shares. I want to own more than $100,000 of Amazon. That's the mission. Right now, it's discounted by a little bit. It's a high quality company. High quality companies are not going to offer you ridiculous discounts unless you have a full market correction or crash like we had in 2022. Then everything's discounted, and the discounts are outrageous. So that's when I'm playing Amazon. Now, I don't have to know the Amazon stock price every hour of the day. I can go to sleep. I can wake up. No problem. No problem. I go work out, go hang out with my wife. That's a different experience than trading. Because let's say I thought Amazon was going to go down, so I shorted $100,000 of Amazon. I'd be watching that thing.
You're stuck at your seat. You're not moving. There's a reason why traders are fat. If you don't get to leave our chairs too much.
Oh man. So I think, but I would say that, I'm a fan of the game, which is making money on stocks. And I do put myself out there from time to time. I'm like, you know what? I do want to take a position. Like I've shared my short positions, right? And those shorts do take a little more interest because as stocks move, like the shorts that I'm shorting a few positions right now. Let me show those to you. And the reason for it is that I think the environment is where the AI hype, and I'm a technologist. Okay. I've worked professionally in technology for a long time. And I think AI is going to be something really interesting. It's just a little too hyped up. So I think companies that have been really hyped up, we talked about Apple. I've got roughly $7,000 at risk with Apple. Broadcom, $8,000 at risk of Broadcom on a short position. These are long-term shorts. I'm waiting for them to go up or down 30%. NVIDIA, this one gets a lot of interest. Looks like I'm ahead on NVIDIA slightly. And that one's been up, down, up, down. It's like crazy, but it's kind of consistent with the story that I told in May, which is this stock's really overpriced and it's having a hard time going above when I started shorting the stock. That was luck. I'm not claiming to know when, highs are reached and anything, but I'm shorting NVIDIA. I just started shorting Palantir yesterday. So that's a new short position. Vertev, which is, they do electric equipment for the data center. They're not that special. They don't have intellectual property, but they've been hyped up. So I'm shorting that. And then I'm shorting a utility that their revenues have been going down, but everybody believes their revenues are going to go up because the data center needs electricity. I get that, but why is their revenue going down? The facts don't match the story. So one's wrong. Either the story's wrong or the facts are wrong within their financial statements. So this is a theme that I'm seeing and I'm shorting them. It's a little bit of a hedge on the rest of my portfolio. Mostly I'm holding stocks.
Short Palantir is interesting.
Yeah, I think, Palantir, they're not growing that fast. It's like when you compare, and I did a video of the stocks that I think are most grossly overpriced. And I put it out there that if you look at Palantir's growth, it's not that impressive. Impressive is 100%.
Right.
Okay? 21% is like, okay, that's pretty cool. It's kind of like where Spotify's at, right? Spotify was like at 16%. That's impressive, but it's not like overly exciting. Like, wow, man, 100%, 80%. If you grow at that rate, you're going to go from being a $2.4 billion company to $10 billion in 2, 3, 5 years, right? Instead, it's like, all right, you'll be a $5 billion company in 5 to 10 years. Okay. Well, Meta's growing at 20% and they're already a $134 billion company. So 21% is not that exciting.
Right.
So why is the valuation so freaking expensive? Okay. Riddle me that, Batman. So that's what's missing. Either the market is overappreciating Palantir, and I understand their software. I understand they have some uniqueness, but I would say Palantir's competitors are going to be Microsoft, Google. Those are the two main ones. And Microsoft and Google are pretty good. Pretty good companies. They're pretty damn solid. And Palantir sells what is a big data solution where they're trying to pick out patterns that would then lead law enforcement or governments to realize, hey, there's a pattern here that you should be concerned about. That's something Google can do with BigQuery. That's something that Microsoft can do if they focused on it. If they come around to focusing on it, Palantir is going to have a tough time. I think they're going to have a tough time growing. And they're tiny right now. They're 2.4 billion. Microsoft is massive. They're how big is Microsoft? They're gigantic. They're 245 billion. They are 100 times bigger than Palantir, and Microsoft's growing at 15.6%. So, not impressed with their growth rate. I think they're susceptible to the competition from these massive companies that could erode them from the marketplace and really, if anything, slow down their growth. So that's my story on Palantir.
Are you looking to average into that trade all the way into the S&P rebalance?
And you use the word that I'll change a little bit is I'm looking to average into the position, not
Positions?
the position. Yeah. And then it'll be that guardrail of 30%. If it goes up 30%, I pay the market for a lesson. I'll try to figure out what that lesson is. If I make 30%,
ooh, big pullback on it today. Ooh,
man, I got to keep talking bad about Palantir. It's causing the stock to go down.
Yeah, nice pullback on it today, all the way back.
But yesterday it went up, so I think I'm still underwater. But we're 24 hours into it.
Yeah,
I'm gonna set it. I'll buy. I don't like pouring capital into a position. I like to average it out over a little bit of time. I could see myself shorting more shares. Maybe tomorrow before the Fed talks. If it's up tomorrow in the morning, I'd probably short a couple more shares.
I will let you know that the rebalance is this Friday, where Palantir is getting added to the S&P 500. So that's going to possibly make the stock go a little bit higher going into the rebalance. Depends if it pulls back before that day. So you want to keep an eye a little bit close going into Friday. And then Monday is where I'm really excited to short Palantir, because the higher it goes into Monday open, the more I want to short Palantir that day.
All right. Another 30 seconds of good value. Making myself a note. Monday, Palantir. I'm liking what we're talking about, Brad. You're giving me, see, I'm an investor, so I have blind spots.
Right.
I'm like, this is how I drive the car, man. And then you're like, hey, man, this is how I drive. And you drive differently. And I'm like, hey, that's a really good point. Like, you're pointing things out, and I hope I do the same for you.
You are
pointing things out where I'm like,
stocks in ways that I've never done before. So this is amazing for me.
Yeah, so I'm totally blind to some of these points. Now, are you going to convert me to being a trader? My wife's going to come to Toronto and beat you up if you do, because I'm not going to spend any time with her and she's going to be angry. I don't think so. I think I love what I do, but I want to dabble in it, man. I'm a fan of making money, and I'm a fan of the stock market. So if I could play around a little more with my shorts and take in some of like your points and the way you address and make money in the market, I think I'm going to be better at it. So good stuff. All right. So I think we've had a really good session. If you wouldn't mind, I will land the plane on the stream. I'd love to do this again. I'm going to attend your stream tonight. So Prad streams at 8 p.m. Eastern. Every trading night, correct?
Monday to Thursday, and then Sunday 6 p.m.
And then Sunday 6 p.m. So Sunday might also be good. So I will attend tonight, and I'll try to attend regularly and continue to get some of this good value. But I really appreciate you joining me this morning. Good luck with your trades today. And again, thanks a lot, Brad.
Yeah, thanks for having me, Victor. Had a lot of fun here.
Awesome. All right, everybody, take care. Have a good day. Good luck today.